LEG Immobilien is one of Germany's leading residential real estate companies, combining sustainable growth with reliable returns and a strong social mission. In this elevator pitch, we welcome Frank Kopfinger, Head of Investor Relations, who gives investors a concise overview of LEG's business model, key value drivers, and strategic priorities. Frank, the stage is yours.
Thanks for the introduction, and thank you for your interest in LEG Immobilien. I'm Frank Kopfinger, Head of Investor Relations and Strategy. So, who are we? LEG is the second biggest residential company in Germany with 172,000 apartments and around 500,000 tenants. We are a pure play, so we only focus on residential business and we only focus on Germany. Roughly 80% of our assets are in North Rhine-Westphalia, which is the biggest state in Germany and which represents 22% of the German GDP. Within residential, our focus is also only on one asset class, which is affordable living, and with this we have a high social responsibility. Our tenants pay just around €7 per square meter or around €450 per average apartment. 17% of our units are rent restricted, and tenants get subsidies from the state as they have only little or even no income. We have a reasonable portfolio valuation of around €1,700 per square meter and a portfolio yield of 4.9%. The portfolio valuation is well beyond replacement costs, which should be in the order of €4,000 to €5,000. Based on this valuation, the NTA per share, the NAV, stands around €131, which represents a discount on the shares of 50% if we take a share price of 65 into account. This certainly reflects the headwinds which we as an industry and we as a company face from the current interest rate environment. We believe, however, that we well navigated through the last couple of years when interest rates went up. We focused our steering on cash and AFFO, which is a proxy for the free cash flow generation and which became our core KPI since 2023. We put a couple of measures in place to protect and support the cash generation. We sold around 6,000 units for more than €550 million, all of which we deemed to be non-core. We offered scrip dividend for the dividend 2023 and 2024. And given the capital intensity of new development business, we shut down our new development activities and finalized the last remaining units in 2025. All those measures combined add up to 1 billion in cash, which we saved and helped to steer through the crisis without jeopardizing our earnings base as well as our cash generating base. And all this helped us to get earnings in 2025 already back to pre-crisis levels based on FFO1. And on AFFO, we aim for a new record result in 2025 and 2026. And based on those, we expect to increase the AFFO per share by around 10% for 2025 and by another 5% for 2026. And looking forward, the underlying fundamentals remain intact. The housing situation is driven by a huge imbalance between demand and supply. The number of finished housing has continuously come down, and the gap will further widen as the number of finished units is still declining. LEG is well positioned within the affordable housing segment, and we expect organic growth drivers to persist. The market rent dynamics will continue and rents continue to grow. Our financing structure is solid and we still benefit of low average interest costs of only 1.59% at an average maturity of almost 6 years based on the Q3 reporting 2025. Our restricted units, which represent roughly 70% of the portfolio, they will get off restriction and will allow us to develop the rents for those units towards the market level within the regulatory framework. And this provides us with an organic growth driver for the future. Additionally, we will continue to provide services like energy, craftsmen, and multimedia to our tenants, and which allow us to capture additional revenues. And finally, on our dividend policy, this is based on AFFO. So we pay out 100% of our AFFO as well as parts of our net proceeds from the disposals. And with this, investors should at least benefit from an increase of the payout ratio by 10% for 2025 and 5% in 2026 based on the AFFO development. I hope you found this short elevator pitch useful and it caught your interest. Please do not hesitate and contact me in case you have further questions and you want to dig deeper into the LEG case. Many thanks and have a good day. Goodbye.
Thank you, Frank, for sharing these valuable insights into LEG Immobilien's performance and outlook. For investors seeking more, visit Seat 11A to explore additional videos, including the elevator pitch, financial results, and deep dive presentations, offering a comprehensive view of LEG Immobilien's strategy and long-term value creation.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.